It's a Christmas Eve version of the Daily Trader. Not a lot of data to worry about, but there are some things that came out today. We did get some jobless claims that showed a good solid number, 214,000 first-time filers for unemployment insurance. So that is down from last week, 224,000 revised up to 225. So the labor market continues to be strong. The no hire, no fire economy seems intact here. Good numbers on the labor market. Mortgage apps, end of the year, interest rates ticking a little higher, taking its toll on mortgage apps. Currently, the composite was down 5% after being down 3.8% last week. Purchases, after being down 2%, 2.8% last week, down another 3.7%. And refis, taking it on the chin with higher interest rates, down 3.6% last week. This week, down 5.6%. So higher interest rates. Remember, the Trump administration really talking about housing and stimulating housing going into next year. I think the key is two things. It's real simple. It is lower interest rates, getting mortgage rates below 6% into the 5 handle, and then supply. Remember, the U.S. has been short on housing supply really ever since the financial crisis of 2008, 9, and 10. So we have been playing catch up, and we haven't been doing a good job of catching up, frankly. So that's the key to housing: supply and lower interest rates. So those two things are something we'll look for to the end of the year. Then Tim Cook on the board of Nike already, remember, buying some, I think he bought 50,000 shares of Nike worth about $2.9 million. Remember, that stock has been under some pressure as of late. Crude oil prices that have been working their way lower, firmer here as some uncertainty with the U.S. expected to board another ship from Venezuela anytime soon. So we're watching crude oil there. Crude oil down 18 cents, trading just over $58, not really being affected by it. So all these things lead to, but what we are most of all this time of year is in holiday markets. The markets are drifting. The markets are slightly higher. There's a path of least resistance, seems to be higher because the economic data that we've gotten this week has been pretty solid. So we're watching all that. We're watching into the end of the year and looking for a massive 2026. That's our show for today. We'll see you next year with another edition of the Daily Trader. I'm Kevin Hincks.